Alicia Miller, welcome to the show. Thank you for being here.
Yeah. Hey, how's it going?
Oh, good. I'm going great. I'm glad you're here. Give us a little background on yourself, directsourcewealth.com, and then let's talk about commercial real estate investing.
Yeah. So a little background on myself. I've been in capital raising for a number of years, but aside from that, I would say commercial real estate's really in my blood and bones. I come from about three generations of, multifamily commercial real estate investing. My grandmother starting out in 1965 in LA and just building up a portfolio. My mother doing the same. So it's always been a highlight in my mind to have some form of passive income and make your money work for you, so to speak. Direct Source Wealth has been around for about 3.5 years. Kira Golden, our CEO, started out as a financial advisor and then found out, through, education that, the alternative asset classes that are other than stocks, bonds, and mutual funds, had some, a lot more benefit in her opinion. So she was a consultant for a while. She worked for another firm, and then she decided ultimately to open her own firm to educate individuals, accredited investors and such, how to, one, do this themselves, or two, how to collect, that mailbox check every month and live off that passive income before retirement, so to speak.
Let me drill down on this a little bit. You could refinance with continued equity growth. Give me an idea of your equity refinance model.
Yeah, so most commercial real estate investment firms, when you invest with them, a lot of them are anywhere from 3 to a 10-year term. You're in there, you're getting your either monthly check or quarterly check or however they do it. And then at the end of the term, you're out and you got to earn that, that money during that time period. We really want to create a different financial model. So we have a structure in the sense, say you were to invest and you have an equity position in one of our multifamily properties. You're getting that, target 15% return distributed monthly. At the end of 7 years, when we refinance, instead of taking out your terms of investor capital, you still hold your equity interest. So the reason why we do that is we want to roll you into another opportunity. And so now that same $100,000 that you invested in, the first multifamily or whatever it was, can now be doubly invested, so to speak. So you're still earning interest returns on that first $100K, and then now you can roll it into another opportunity and start earning equity interest there. And then, after, 5 years there, put it into another. Now you have 3 equity interests. So we really believe in the buy and hold model and creating long-term wealth for our investor base.
Okay. What do you attribute your rapid growth to? It's not just your modeling. There's got to be more to it than that.
I would say the vision and the people. So I think, Direct Source Wealth, we have a vision of, being the one-stop shop for all alternative assets eventually. Commercial real estate's our bread and butter, but eventually we would like to expand beyond that. And then I think when you're investing as a accredited investor, the less people you have to deal with, the better. So if you can become comfortable with us, we would like to take those relationships, hold on to them, hone in on them, really care about the relationships. We are relationships first. And, kind of relieve you from doing the research of constantly going to another firm and another firm and another firm. We really listen to our investor base about what they want and what we are able to source in regard to that. And because of that, the rapid growth of our investor base has grown in 3.5 years. People oftentimes are referrals. And then we have something called the Golden Circle, which once you invest $500,000 in, one or a number of our deals, you get some preferential treatment with the firm.
Now, before we get into your current products, I want to talk about your geographical reach. Where are you? So tell our audience where you are, and then maybe where you're planning on going next. I know you can't let the cat out of the bag too much, but you can be generic.
Well, I always tell investors we primarily stay away from, the popular coast, California, Florida, New York. You're not going to see us there. We're more in the heartland, so we're in Colorado, where, a number of our team members are located. We're in Arizona. We're in Ohio. We're looking, at Texas, Indiana. We're in Puerto Rico. So we saw opportunities there. So we really stick to, I would say, the mountain range, the West Mountain Range, and then where you can really find the rate of return. You're not going to really find the interest for investors in LA or New York City. It's too competitive of a market, so to speak.
Yeah, it's a lot easier to come here through the Midwest. And do you find? And I know I still want to get to your current products, but do you find that Texas is kind of just a leader, or where is it in the pack?
Right now we're not in Texas. I just have we're looking at it. I would say we have a number of Texas investors. I'm originally from Texas, so my mother has properties out there, so I see the value. But I would say multifamily commercial real estate investing is becoming much more competitive. So, it's in Texas, but I would say right now we're focusing on Colorado. We found some really great opportunities, and then Arizona has been really great for our market.
Well, we only have about a minute and a half left, but current products, development, and where the company is heading, because I understand it's not just a real estate firm.
Yep. So right now we have a Denver condo development that we're really excited about. So we do have a new development arm of our firm. Part of the reason why we're doing the condo development, a lot of people don't know this, but in Denver, there's a 4% condo market share when the national average is 20%. And part of this was a law called the Construction Defects Law that was in place that hindered developers from building. That's now been reformed. So we're filling the gap there. We're really excited. It's based on a 1.4 equity multiple right now for investors. Additionally, we have a multifamily value-add apartment complex in Aurora, Colorado, which is east of Denver. We have an opportunistic fund, which is a $100 million fund. That's for the people who want to be highly diversified and mitigate risk by, being involved in more than one property rather than just the direct return off of one. And then we are looking to source a few more properties. So we should be under contract for another property here shortly.
Okay. That's about all the time we have now, but I'm really interested in talking to you more, but we've got to go for now. Alicia, thank you for being our guest.
Yeah, thank you for having me.
My pleasure. Alicia Miller, Funding Manager, DirectSourceWealth.com. Segment has been brought to you by the Vitamin Patch. Thank you for listening to Michael Yorba and Ed Baxter on CEO Money. And don't forget, podcast any way you get them. Follow up on this one. We'll be right back with the Private Equity Spotlight and Ed Baxter on the other side of this break, and then Austin Peterson.